Hey, what's good, everybody? Welcome to the Closing Beat. Happy Wednesday. How's it going? Hope you're having a good day here today. This is our quick show that we do just to update you on the stock markets, go over the good, the bad, and the ugly, and got a little bit to talk about today. We're financial advisors here at Jazz Wealth, so if you see something you like or you like the idea of an advisor helping you, teaching you along the way, I hope you'll check us out at jazzwealth.com. You can open or transfer your account right on our website there. So let's get started. May through October, typically, and as we teach our customers here, that's historically the toughest 6-month stretch of the markets. Very tough time of year. You can kind of see that's already getting started. And so for the day, you got the Dow higher by 4, the S&P lower by 4, Nasdaq lower by 20. If you look at the chart on the bottom right, you can see basically everything was trying to get going a little bit here today. They came out to support the markets, right? Like we talked about yesterday. Don't be surprised if the White House tries to say a few things to get everybody excited and stop selling, really, on this trade war issue. So we got tweets from President Trump saying everything's cool. We got comments from Sarah Huckabee Sanders out of the White House saying China has indicated that they want to make a trade deal. Come on, like just trying to help slow the markets, but it worked. So you could see the stock market throughout the most of the day ended up kind of rallying. That chart on the bottom right of your screen is a little tick by tick. What did the S&P 500 do? Every 5 minutes gives an update there, and so that's what you've got going on. Right at the end of the day, you got a sell-off that took us back into the negative. I think you're going to see this, really, unless there's more news about, like, hey, this is all good, putting this behind us. I don't think that happens. But you have no reason for investors to take any sort of real risk until Friday, right? You have tons of put buying on the VIX. We talked about this yesterday, where people are saying, I don't know what's going to happen, so I'd like to protect my portfolio. They're paying up for that VIX premium there. And so you just have a lot of people saying, I don't know. What do you want me to do? I can't do anything until Friday, till we know the outcome of the trade deal. Either Trump walks away from the table, they come up with an extension to the trade deal where they don't put on the new tariffs or the increased tariffs, but they extend the deadline. I think that's the most likely scenario, that they say everything is going to go well, we're going to extend the deadline, or you flat out just, hey, deadline is it. We're not going to move on from this. Tariffs go to 25%. Trump does what he says he was going to do, and then China, like they said overnight, we're just going to retaliate the very second you put new tariffs on us. So very interesting there. Let's go over to the markets. Anyways, you've got the S&P 500 basically flat, right? So nothing really exciting to report in terms of the S&P 500. I think it stays that way, right around the 50-day moving average. Nasdaq a little bit weaker on the day, continuing to pull back. All this noise from the highs now. Now you know, right? If you ever see the markets or a stock in an uptrend, and then you see this back and forth kind of noisy time period in there, now you know exactly what's going on, right? It's indicating that we're looking for a reason to buy, can't find a reason to buy, and so we start pulling back a little bit. The Russell down 0.5%, just a mess, really messy sort of category there. Now, as far as how May has started, you got to go back 9 years to find a worse starting May, meaning the stock market, the S&P 500, has had its worst start to the month of May going back 9 years. And when you go back 9 years, you're going to find out there's a little flash crash in there. May 6, 2010 was a day that a lot of traders, including myself, will not forget, because that was very exciting. I'll never forget where I was, what I was doing. It's one of those weird things where nobody got hurt physically, like nobody died, but that we know of. But, it was a very rough day. So anyways, worst start since May 2010, really, going back there. Now, what does that mean? If you're one of our customers, you got to go see our portfolio update that we did last week. I actually showed the average performance day by day through the month of May for the history we went back to my birthday, actually. We went back to 1982. And so we actually showed what happens. Go back in there and you'll see exactly what the markets tend to do as we get in the later part of the month. You guys know what I'm talking about in there. Earnings-wise, it's the third busiest week here for earnings, so you got a little bit of that sort of sloshing Jello on the plate thing going on there. But everybody's really focused on the tariff news. The Trump tax return sort of leak out there almost got no attention today, probably what he wanted, and some other bad news out there as well. But everybody's focused on the trade news. Very public trade negotiation, which is odd, by the way. If you've never seen this before, it's pretty odd. As far as the sectors go, you got oil a little bit higher on the day. Wednesday is when we get our U.S. inventory report. They came in at a draw of 4 million barrels. So the U.S. stockpile of crude oil in Oklahoma reduced by 4 million barrels, helped support the price a little bit. And then you had some news out of Iran. They're playing tough over there. And so Iran helping support the price of oil in the short term. Tiny little pullback here. It is one of the weaker areas of the market in the short term, or one of the more oversold areas, at least temporarily. And so you had oil a little bit higher, and you had oil explorers, things related to that, energy just a little bit higher on the day. I'm sorry, not energy, oil explorers here. The XOP is what we use to track that. If you're one of our customers, or if you just joined us, go into the dojo. You've got the invite. You could play along right here with me. I'm not going to go through everything today, but you got retail sloshing around here. Looks weaker in the short term. Technical traders are going to expect that to pull back some more. So no hurry in the retail category. Oh, and if you look at the bottom, utilities breaking down here just a little bit more. That's no surprise right here. The closing beat on one of these days right here. We actually pointed out not only was price extended, but fundamentally the sector was overvalued relative to its history. And then we actually showed you on the closing beat, one of those days in there, we showed how the utilities actually perform going forward. All signs pointed to a break, meaning just nothing, right? Pullback, small sideways movement. We sort of showed that on there. So maybe something interesting that you like to check out. Regional banks I like to point out as well. Small pullback in there. This is like, this sector to me, this little category gets the credit for like the strength, right? This place is pretty darn strong. Worked through a lot of resistance there, just pulling back in the short term. You got new highs here, technical trade, not new highs, prior highs. Technical traders are going to use as their resistance point in the short term. We need a catalyst. That's the simple way to say it. Traders want to buy the market. People want to dive in. You have investors that have said, I missed the whole entire rally that happened since the beginning of the year. I talk to people every day that say, Dustin, I've been sitting on the sidelines. My bad. What do I do? And so you have a lot of people that want to participate. They're just looking for a reason. And even though the markets are pulling back, you haven't given them a good reason yet. Nobody wants to buy into uncertainty, and uncertainty, unfortunately, will take us all the way through the end of the week. So if you've got nothing to do for the rest of the week, unless you just want to hang out for the Uber IPO, it wouldn't be a big deal if you missed a few days here. If you're one of our customers, don't miss tomorrow. Of course, we're going to do our wine and wealth class. Let's talk about Lyft. Down almost 11% today. I got to tell you, this is sort of laid out perfectly in the video that we did prior to Lyft going public in terms of the real value of this company. Should you buy? I think it was called "Should You Buy the Lyft IPO?" And so I went through this, but basically today, what's happening is earnings, right? The company loses a ton of money. I don't need to go through all the boring numbers and everything with you. Revenues overall were better than expected, and the company was like, look over here. Look at our revenues, right? Everybody, please look at our revenues. Don't pay attention to the losses all day. That's what they did. Every headline from Lyft, every sort of communication that they had was like, don't you like our revenues? They have to do that, right? So big losses. They are going to continue to experience losses, as they've said, for the rest of the year, and they think this is their bottom. They think this is where they stop losing money. All should get better from there. At least that's what they say. I don't I don't agree, only because we did that. We talked about this. In order for them to stop losing so much money, really at this point, the only thing they can do is take more from the drivers. And I don't know if you've seen it today, but you already have drivers protesting at Uber headquarters. They're pissed. Not all of them. I mean, they made a bigger deal out of it than it really was, but you get the idea. So Lyft is basically saying, okay, either we continue to spend in our scooters, our autonomous vehicle sort of partnership with Waymo they just announced, and we hope that drives revenue in addition to what we do with our ride sharing, or we have to take more from our drivers. That's not going to go over too well when you've got a very large competitor out there. Anyways, Lyft, that's what happened with Lyft. They also, if you're in Phoenix, look out for the Lyft and Waymo autonomous ride-sharing cars. So they're testing, I think, 10 of them or 8 of them starting today or yesterday in Phoenix, where you could order a Lyft, and there may not be anybody in there. There's going to be a guy like monitoring, but he won't be driving. So I don't know. That could be something there for him. If you're a bull on Lyft, or you're just really hoping things get good for them, well, maybe that's something you could take a look at. Real quick, Uber going public on Friday. I think I said Thursday the other day. They're going public on Friday. They announced today that they're going to price at the midpoint. So they said 44 to 50 was what they were going to come out as in terms of their IPO. Their IPO is like 3 times oversubscribed, which is normal. They make a big deal out of it, but that's actually pretty normal. So they said today we're going to price right around 47. That gives them an $85 billion valuation. Company loses money. They lose a lot of money. $85 billion valuation. So should you pay up for this stock? Let's see. I think it's going to be an exciting IPO. I don't mean to pick on them or anything, but boy, it's tough to get excited about a company that's losing money, isn't it? You guys can tell me. Maybe I'm way off base here. Maybe I'm missing something, but boy, it's just tough to get excited about investing in a company that has shown no way of being profitable anytime soon. Anyways, okay, let's go on to a few stocks here, and then I'll take your questions if you have any. Electronic Arts, good earnings report. This would be like the triple whammy of good earnings reports. Beat on earnings, beat on revenue, and they guided higher. They're very positive. The stock was all over the place. What a wild day. It did finish higher by 1.25%. It was a good earnings announcement. I don't know what you want. I don't know what everybody was looking at there. TripAdvisor broke down here 11.5% on the day. They beat on earnings by I think 5-6 cents, something like that. Don't hold me to it. They beat on revenue as well. Here's the problem. Outside of the hotel bookings, right? They're big, obviously, with hotel bookings, but they offer everything: cars, planes, trips, all cruises. Once you go outside the hotel category, they're not doing very well. So investors looked at that and they're like, well, wait a minute. Are you worth that much if all you're really doing is driving revenue from hotel bookings? That's not a lot of revenue there. So I think that was your big reason there for the drop on TripAdvisor. Nice little drop if you like that sort of thing. Sprint a little bit lower on the day, lost 3%. They lost a ton of subscribers, right? It's the lowest subscriber count since 2016. Subscriber count means the people that pay to use the service. They just say subscribers. It's not like they're YouTube stars or something. All right, Match Group. Do you like Tinder? How many of you just signed up for Tinder? Come on. It's a public company. Match Group, by the way, they own Match.com. They own a bunch of other names. Tinder makes up 2/3 of their overall revenue, and they killed it. They added 4.7 million Tinder subscribers. That's higher than they expected by over 1 million. What are you guys doing out there, man? So again, Tinder is a big chunk, 2/3 of the company's value. And so when they kill it in Tinder, all you guys doing whatever you're doing on Tinder, when they kill it there, you get 12% higher for the stock. So a great day. I mean, agree or disagree with what they're doing there. Great day. Disney higher after hours here. Beat. I didn't really get a chance to dig too far into this. Beat on earnings, beat on revenue. Revenue was actually higher by 3%. This is a great earnings report. Parks revenue higher by 5%. Studio revenue higher than expected. I can't do the math. I don't know what percentage that is. Avengers Endgame, that's that movie that just came out. It's now the second highest grossing movie of all times, and I haven't even seen a preview. I know nothing about this movie. I'm so getting old. But Disney, yeah, great earnings report there. Roku actually doing well after hours here. Beat on earnings, they lose money, right? So they lost less than expected. Now here's a company that's showing signs of we can grow. I mean, the stock price is up like 100% this year. But here's a company showing, okay, we can grow. We're growing our way out of that build and spending sort of loss period. They lost less than expected. I believe they only lost 3 or 4 cents there. I can't seem to get this thing to load. Revenue was better than expected. Number of active users, that's a big one for them, higher by $2 million. And then a big metric here is the average revenue per user. That's a big one. So as soon as this thing says, yep, it's going to give me the data, there it is. Much better than expected. 19 bucks a user basically versus 18 and some change. That pretty much means that almost one in 2.5 to 3 TVs that are bought in the last quarter are Roku TVs. Not bad. Not bad. Etsy reported earnings as well. Good earnings, really. Good earnings there. Number of sellers higher, 13%. Just good earnings. Yeah, we'll cover that one tomorrow for you there. But I hope that helps you. Just a kind of a quick review there. I will take any questions if I happen to see them here for you. Let's go. Yeah, something's going on there with that Tinder, man. There's a lot of people checking that out. Uber lost its essence when its drivers use it as their main job instead of initial intent with ride share. Okay. I don't really have an opinion outside of their finances because, come on, it just kills me. In December, was the market drop due to the trade war? If so, what to expect on Friday if they rise it to 25%? Well, so coming up on Friday, look, this is the issue. Did we just price in, and I've been saying this for months now, have we priced in the trade war? If so, then what happened the other day was that the amount that was priced in. What are we falling, like 3%? Did the market price in a 3% pop for a successful trade outcome? I don't think so. I think they priced in a lot more, to be honest with you, but so far we've only fallen 3%. I think Friday's not a day you're going to want to miss in terms of what happens there. I don't suspect that President Trump's just going to say, nah, I was just kidding, man. I was just trying to get you over here so we can negotiate. I have a weird sneaking feeling that this is going to be one of those where Friday sort of comes and goes, and the headline is going to be Trump walks away from trade deal. I really kind of, if you look at the guy's history, you kind of think that's what might happen. I honestly don't know. I mean, I'm not a part of that, or I don't study it that much. You go by what the personality of the president is. We could see. Yeah. I'm sorry. Lots of questions. I forget. Oh, you guys are talking to each other. Okay, I like it. Hey, by the way, a couple things here. Tomorrow, it's payday for you dividend holders out there, at least one of the paydays. We own all of these stocks here, but I'm just going to report them out to you in case you own them as well. Boeing, 206 in dividends. IBM, $1.62. Constellation Brands, 75 cents. Costco, 65 cents. And they reported just a minute ago, Costco's killing it, by the way. Walmart, 53 cents. Wells Fargo, 45, and Pfizer, 36 cents. So it's payday. If you own those stocks, if you're a dividend investor, you're getting paid. You got it. Volatility go crazy on Friday. Yeah, I am a little concerned about those leveraged ETFs you're talking about there. Boy, remember the blow up that happened last year? That could be some serious trouble there. There's a lot of people that use leveraged volatility ETFs, and they don't know how it works. And it's not their fault. They're not bad people. But the one you're talking about there, the double leveraged ETF, hang on. That's all I can say. I think you're sort of right. Yep. How many companies do you recommend to build in your portfolio? So it's going to start with cost, right? If cost is an issue because you pay per trade or whatever it is, then you may have to look at an ETF and find something in there. Yeah, you essentially pay them a little bit just so you don't have to, so you could be diversified with one or two products. Cost is not an issue with us here. So a lot of our dividend funds got 100 stocks in it, right? Because we can buy and sell them without any commissions or anything. So start there. I can't speak for whatever you pay or how that works, but really start there, because you hate to see somebody tell you, well, you should have 20 stocks. Well, what if you pay $5 a trade or something for every one of those and you have a $200 account? You're done, right? So start there before we dig any further. Yep. You got it. We'll see. Okay, so I reported the dividends. Let me see. What else do we got here? Earnings tomorrow. Duke Energy, Booking Holdings. That's typically one that beats, although last quarter they didn't. Equifax coming out as well. Kraft Heinz still restating. And Symantec, if you're in that category. So we'll see. Okay, I think I covered it all. Put a lot of effort into this, so I want to make sure I get all of it out that I wanted to share. Yeah, we're good to go. So tomorrow, look, ask yourself, who is willing to buy the market aggressively tomorrow? If there's no news, right? If everything's just kind of normal, who's going to buy the entire market? Maybe some individual stocks. I see what Disney did, Roku and everything. But how do you get people excited to buy the whole market? I don't think you do unless there's any real news, or maybe if they resolve the trade war tomorrow or something, which is not in the cards. So ask yourself, what's supposed to happen? Friday is going to be an extremely busy day because of Uber and all the excitement around that, and also what happens with the trade issues there, although I would expect that to be more later in the day. So, yep, that's all I got. I hope you enjoyed. If you did, maybe you'll hit the subscribe button. Don't forget to think of us over here at Jazz Wealth. If you don't need to work with us, that's cool. Maybe tell a friend or something, and I'll thank you for it. I'll keep this thing going and help you guys out. Enjoy the rest of your day. and we'll see you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.